Good afternoon, Map here, Map Investments. I want to talk to you about Twitter. Twitter was active today on the options board. It was the 7th most active, up 8.43%, almost $4. IV rank is very low, 17, 343 contracts traded hands. There was some news that Snapchat has partnered with them for interactive embeds on its platform. The 52-week high on Twitter is 52.93, and Snap was also up big as well. This is the chart on Twitter. You have a gap down here, and it's already been kind of filled, and the high is 52.93 with big volume. They don't have earnings till February 9th. And basically closed up $4 on pretty heavy volume. Now, I went in here and I tried to sell some stuff, and I could not collect any premium. But it was a pretty big move, 8% on the news. If you look at the Tastywork platform, IV rank here is 28 on TOS, Thinkorswim was 20. But if you go to 55, like in January, where it's 36 days, which is still a sweet spot, but it's already getting a little bit far away from the 45-day mark where I like to sell them and manage them at 21 days. The 55.60 is only bringing 91 cents, so there wasn't much premium here. What I decided to do was I did a calendar spread on the put side. And what I did was I went out, I sold the January 50 put, and I bought the February 50 put. Now, calendars aren't sexy, they're slow moving, but the good thing is about them that on the front month, you got theta working for you. Theta on this option is 4 cents a day. So I have theta working on me. It's more of an IV expansion trade. I went right at the money, basically right out of the money at the money because it's over 50 right now, and that's what I did. I sold the 50 put and I bought the 50 put. Now this was a deduct of $1.98, so this was a $200 trade. And you can look at here in the Analyze tab how this trade works. Let me see something here. Let me kind of cancel this one. All right. So this is how the trade works. This is the Analyze tab. So the stock right now is at about right here, 51.21. So let's say the stock goes up, keeps going up, but then it falls back into range because it's kind of overextended. I don't think it's going to break out to new highs with no earnings or catalyst, and I think the market's a little bit overextended. Today the S&P was down 2, the Dow Jones up 4, the Nasdaq was down 15, so we're kind of running on fumes here and there. Let's see what happens. But going back to the trade, so if Twitter stays within this range, I make money. So here at 47 I still make money. All this range here, if you see as I move on the left, you can see that the max gain on this trade is about $140 on a $200 investment, which is a very good return. This is a debit, but you do have the front month working for you. All I'm looking for is a pullback and an expansion in the volatility, and maybe try buy this back for 25% return. Like I said, this is just an engagement trade to be engaged and be active. I did 85 trades today, and calendar spreads aren't sexy, but the research shows that they're better than debit spreads. So if you wanted to do a debit spread, for example, a debit spread here would have been, you go to let's say you were bearish, like I think we're gonna get a pullback in it. You would have bought, let's say, the 50. So you go, for example, let me show you Tastywork. You're gonna go long, put vertical. right here, right? So you go to the 15th, let's say, and you buy the 50, and let's say you sell at 45. This would have cost you $153. But the problem is that you have theta working against you. You don't have any theta working for you, as opposed to a calendar. Calendars, at least you're collecting the front month's theta. So what happens is this one is going to decay, and hopefully you can buy it back for 25% or whatever you collected for this premium. Sometimes you can end up with this, like if this one decays, you could buy back this at the 21-day mark, more or less. Well, actually 36-day when it's going to expire, and try and collect this one. That can happen too. And this one has uh, more time on it because it's in 71 days on it. It's in February. So that's a trade I did on it. Um, Hopefully I can make 20%, 25% of my money on the $200 investment I did on Twitter. I couldn't find anything else to do because it just couldn't get far enough from the stock price. So I said, well, let me try a pullback because the stock was up 8%. So that was my trade on Twitter. It's called a calendar spread. Calendar spreads are very effective when you're buying options. Thank you. Please like, subscribe, comment below, and share the channel. I'm trying to grow a channel, and I appreciate all the feedback from the regulars. Thank you.